Welcome to another episode of Money You Should Ask, where everyone has something they can teach you. I'm your host, Bob Wheeler, and in this episode, we're going to explore, question, examine, converse, dig deep, expose, laugh, and cry about the money beliefs, money blocks, and life challenges of our next guest. Turn up the volume, listen, learn, and laugh. Our next guest is Matthew Sullivan. He's the CEO and founder of QuantmRE, a company that helps homeowners access a portion of their home equity without taking on more debt. I like it. Matthew and his team have helped over 100 homeowners use their home equity to pay off expensive credit cards, remodel their home, pay college tuition fees, or to diversify into other investments, all without taking on extra debt. Matthew has a proven track record in real estate innovation. Originally from London, Matthew worked with Richard Branson's corporate finance team and was a director of the Virgin-sponsored London Air Ambulance. A helicopter pilot himself, he is also the host of his own podcast, Hooked on Startups. Matthew, it's so great to have you here today.
Thank you, Bob. Thanks for having me on.
You've got a big resume. You've done a lot of things.
I was going to say that's not my resume. It's funny actually looking back when you were saying things like that. I was thinking, God, yeah, that was quite a while ago. But it's funny, as you continually sort of march forward, you sort of forget about the things that you've done in the past. So it's I think I must have peaked early.
There you go. Uh-oh. It's all downhill from here, right?
Exactly.
No, it's all up. It's all up. Well, let me ask you this. You seem, and I can appreciate this, you seem like somebody that gets bored easy. So you got lots of different projects going on, or you're always moving on to the next thing.
Well, actually, funny enough, it's the opposite because the important thing is really there's a lot of stuff I get quite interested in. So I like doing lots of things. But I don't think I get bored easily, and I think that's I love throwing myself into stuff, and the problem is I just acquire hobbies and pursuits and passions and things. Most of the stuff I like doing as a hobby tends to involve gear, so things like diving and flying and stuff, anything to do with gear is always really interesting.
And to me, when you talk about gear and diving and flying, what I hear is death.
Well, yes, I mean that is one unfortunate consequence. If gravity normally wins actually, and yes, and hard landings do sometimes involve a fair amount of paperwork afterwards. But no. So far, so good, as they say.
So far, so good. So let me ask you this. Did you have siblings growing up? What was it like in the Sullivan household?
Well, yeah, I have two sisters. So one is 4 years younger and one is 14 years younger. Wow. So, being the older brother, I was actually sort of I went off to boarding school when I was about 12, which was actually brilliant fun because then I could, get away from, being surrounded by sort of sisters and things. But no, I mean, the household, I was brought up in southeast of London. My father was the managing director of one of the very early merchant banks, manufacturers Hanover. And so, I went to a great school. I went to Westminster School in London. So I was out walking around Westminster Abbey in the mornings, complaining, for goodness sake, that every morning we had to go into Westminster Abbey to sort of do our morning prayers, and now it's like, what's wrong with you? I would sort of kill to go back and do that. So no, I had a
perspective.
Yeah, it is, it's all these things. They say youth is wasted on the young, but no, I had a great, it was, my only regret is that I didn't learn to ride a bicycle until I was about 9. So I think I've fixed that with my current children. They're all learning at the age of 4 months. Yeah,
that's good. That's a good age to start. Now, did your parents talk about money? Your dad worked in banking or worked for a bank, merchant bank. Did you have an allowance? Did you talk about money? What's the British way or the British way in your household?
Well, it's funny, but there was never any, thinking about it, it's one of those things that looking back, you think, well, there was never any education about money. Money was, I think my father used to refer to it as, son, money is useful stuff, you should get some. And I think that was sort of as far as it got. So there was never really any education about money and how it works and what you should do with it and how you should save it. And, so I think a lot of it is, certainly my background, it was you sort of feel your way. It was a given. Money is there. You sort of figure it out for yourself.
Once you got out of college, were your parents like, have fun? We're locking the door, figure it out? Did they help you? What were the struggles when you had to get out in the real world as you're technically on your own?
Well, first of all, they moved house without telling me where they'd moved to, which I thought was a little unfair.
It's unfair.
And that was the beginnings of an indication of their attitude towards how I should carry on in life. No, but really, it was a case of, look, after I left university, as it was then, I was about 21. I went straight into a job and I actually stayed in Birmingham. So I bought a house. I think I left university when I was 21, got a job immediately with Pitney Bowes. And these are the guys that sold franking machines, photocopiers, and fax machines. Okay, so my first job, I was, and this newfangled device called a fax machine had just been invented. So I had to go out and sell franking machines, which basically stop you from having to lick stamps and put them on envelopes. And the big challenge there was a fax machine, because I would go and see people and explain how a fax machine worked, and they would say, but who am I going to fax? No one I know has a fax machine. So it was one of this sort of chicken and egg situation. It's a great idea, but no, it's completely pointless. So until everyone has a fax machine, it's as useful as a chocolate fire guard. So that was a bit of a challenge. And then I moved on, and then I started working for an insurance company and worked there for a couple of years. So I never really wanted to go back home. So the idea of going back really wasn't on the list. And I wanted to, I had my own house. I bought my Opel Manta GTE, and for I don't think anyone has any idea what that is. But it was a really super car. It was like this sort of 2-liter sports car. So that was my, first car. So I would drive around this sort of 21-year-old in this bright red, super duper sports car that absolutely couldn't afford. But that really just didn't matter. The early years of leaving university were fantastic fun.
That's awesome. Now, I actually had an Opel. That was my first car.
Well, you are.
It was a very teeny car, but it was a 4-door.
Yeah, but mine was a 2-door. It had doors were sort of 15 feet long because it was a coupe.
Yeah.
So, you couldn't open the doors anywhere because they were so big. You had to sort of turn into a racing snake to be able to get in and out.
Now, how did you pick that car? What made you decide to pick the Opel?
I just always wanted it. It's one of those cars, when I was younger, there were cars. I used to dream about cars. So I would dream about AC Cobras and Opel Mantas. I actually built a Cobra. So a couple of years later, I went and bought one of these kits. So you could buy a kit. So it would come in this big box, you would assemble, and the instruction manual was about as thick as the sort of New Testament,
right.
So I built this car. I built this AC Cobra replica with a V12 Jaguar engine, which was funny enough, one of my dad's cars. So he was furious when he found out. I just explained, look, this is a much better looking car. I just think the gas mileage is going to be significantly improved because it's much lighter. So.
That's perfect. Now, what car do you drive now? And how did you pick that car? Did you build it?
Now I drive a 2008 Ford Expedition. Actually, no, I have 2 cars. I have a 2012 Suburban and a 2008 Expedition. But I just love old cars now because if anything goes wrong, you can fix them. You don't have to plug them into some digital rights management supercomputer. You just hit the appropriate piece with a hammer, and it normally works. And I just love big old cars. So I've been through my phase of super fast cars, money pits, and all that sort of stuff. So I've done the usual list of German and Italian, expensive cars. Had huge fun with them, but I don't think I'd ever like to go back there.
Go American. Go American.
Yes.
If that's even true anymore, because I think all the parts are made everywhere. I don't know.
Go Mexican, yeah.
Yeah, exactly. So how did you go from selling fax machines to insurance to now you're doing innovative real estate, financing, and creative things? What was that journey? Like, did you one day just say, I'm sort of sick of this? It was just a gradual progression?
No, it's the opposite. Again, it's all driven by this sort of real. I love building things. So, and I think I've always had this sort of real entrepreneurial bug, although I never knew that's what it was. Right. It was a sort of a restlessness, within a traditional work environment, because I just wanted to go out and create. So it's that drive to build, to create stuff. And so my first, so after insurance, I then moved back from Birmingham. Funnily enough, I actually went and sort of lived with my parents for a few months, which was actually quite challenging. It's like, because having gone through that process of owning my own house, and I met my first wife at a university, and going back to my parents was challenging, but it wasn't there for very long. But I started. I got a job as a stockbroker. So this was in 1989. And long time ago. But I was broking the Far East markets. So that's Hong Kong, Singapore, Malaysia, Indonesia, Philippines, and Thailand. So I would go out there twice a year for this sort of 3 to 4 week trip, going around all of those countries, meeting all these different companies. And I did that for, 3 or 4 years. Absolutely, amazing experience, huge education. But from there, a couple of guys that I was working with spun off their own company, and I went to join them. So we sort of set up this small corporate finance company. So I was there. My two sort of bosses were the guys that created this company, and that's how we met up with Branson, because one of the companies that we bought was Perlin Strand's balloon company, and my boss Rory wrote to Richard Branson. We had an office in Kensington High Street, which was a stone's throw away from Richard's office in Holland Park. So Rory wrote him a letter saying, I've always wanted to fly around the world in a hot air balloon. It's the last great adventure. I think you would be a great pilot. Why don't we go together? Why don't we fly around the world in a hot air balloon? It's the last great adventure. So Richard Branson wrote back and said, "Dear Rory, why not?" And so moving from Pitley Bowes to insurance to stockbroking to corporate finance, and suddenly I'm in the world of Virgin and Richard Branson, and building hot air balloons to fly around the world, and meeting up with this. And so we spent a number of years working closely with him after that, with his corporate finance team. And we got involved with Virgin Clothing, Virgin Cosmetics, Virgin Executive Jets, Virgin Bride, which was quite funny watching Richard wearing a wedding dress. Anyway, yes. Sorry, very long question to very short, very long answer to a very short question.
So after you did all that, and now you're going into this, you've got QuantmRE. Like, what was the impetus for that? Like, was it, this will be a quick way to make some good money? This is actually something that people need. It's just another thing to build.
It's a fascinating asset class. So when I moved to the US 7 years ago, so in the interim, after, in the late 90s, I left. We sort of wound that company up. I think, Virgin took over in the end. So I then spent the next 20 years as an entrepreneur. I had my own businesses, finance, telecoms, telecommunications, lending. So it's very much all to do with platforms and money. So the things that I built, I was one of the early internet pioneers. We built a billing company in 99, 2000. We were the first sort of, internet billing company. So I was always fascinated by the sort of machinery of platforms and large scale applications. Now, circumstances brought me to the US 7 years ago. One of the first things that I did when I came here was something I'd always wanted to do, and that is get involved in what we call property in the UK, or real estate. Now, real estate is this fascinating asset class that I'd always been hugely interested in, but never had the opportunity or never really managed to get involved in the UK. Over here, it was an open ticket, and it was what do artists have? They paint on a canvas, a blank canvas. That's it. So I set up I need more coffee required. So I set up a crowdfunding company. Mm-hmm. One of the first real estate crowdfunding companies. And I met some really great real estate partners that I still work with today. And what that crowdfunding company did was allowed people to buy into real estate projects that otherwise they wouldn't have access to. So they could invest $1,000 here and $1,000 there into projects where normally you'd have to have a minimum ticket size of $100,000 or $200,000. While I was working on that company, I came across this incredibly interesting asset class, which was the ability to share in the equity in single-family homes without having to buy the home. One of the biggest challenges with CrowdVenture was getting the deals. Every deal was different. Every deal had its own sort of complications. But if we could help homeowners unlock equity and at the same time participate in some of the upside, then it was a fantastic asset because we could tap into what was a $15 trillion asset class, and we wouldn't have any of the issues of ownership. So we wouldn't have to own the homes. The homeowners own the homes, but we still managed to participate in some of the upside. So it was a very early idea. This was about 5 or 6 years ago. Since then, there are a number of companies that have come into this marketplace. Contracts have evolved, which are option agreements that enable homeowners to allow the investor to share in the upside in exchange for a lump sum. So that's how it works. It's not a loan. You have investors that say, okay, here's a lump sum. When you sell your home, if your home goes up in value, then give me my money back together with a share of the appreciation.
Right.
So it's very different. There's no monthly payments. There's no interest. There's no added debt. It's a real lifesaver for many, many homeowners because we can work with people that have a credit score of, 500 and above, which is, something that the banks just wouldn't even consider. So it's a great product. It's very scalable. And it's something that I just became fascinated with and spent years trying to figure out how we could create a platform that enables homeowners to unlock equity and investors to buy into that asset class. And really that's what we've built with Quantum. And, we're applying blockchain technologies, we're tokenizing the assets. So there's going to be lots of really exciting announcements over the next, few months. But it was something that still fascinates me every day. That I still am hugely motivated to build this because it solves a real problem for homeowners, but also, it gives me that, it's the excitement of being a pioneer in such a big marketplace.
And do you still think real estate, whether you own it with a couple of investors or you own it on your own, is still a really good place to put your money? The economy's going crazy right now. Things are upended a bit right now.
Well, yes, but do your own research. I mean, it's a very large, complex, multi-layered asset class. Real estate does not mean just one thing. It means a whole range of different things. It means you can lend people money, you can invest in projects, you've got residential projects, commercial projects, triple net leasing. There's layer upon layer upon layer of ways to get involved. Are you an active investor? Are you a passive investor? Are you a syndicate member? Are you a fix and flip? The list goes on. So yes, real estate is a large asset class that is not correlated with the stock market. So if stock market goes up and down, normally the real estate sort of market is disconnected to that. You can make some great money in real estate. You can lose a lot of money in real estate. It's the same as any investment class. Just because it's real estate and you can prod it, and it's made of bricks, doesn't make it any more easy. It's just as challenging as investing in stocks and bonds, or anything. In fact.
Well, since you came here about 7 years ago, you wouldn't have been around, I don't think, when in the 2007-8. All that, when the housing markets, everybody was buying 20 properties in Arizona, and then everything just went completely bust.
Yeah, but I mean, there was a global problem. So the impact, the waves, it wasn't just a US issue. I mean, it was, the impact, we felt that everywhere. And again, I was involved in, I think at that time in lending. So I was a second position package lending company. So we were packaging and arranging second position, or like cash out refinance, that sort of thing. So our marketplace dried up overnight. So we were very much finger on the pulse when that happened. But this is very different. So what we're doing here, I know you didn't mention it, but we're not increasing the lending. One of the biggest problems then was you had people were just massively over leveraged. You had tons of debt without the underlying assets to support that, and that was the fundamentals of the problem. There was money was being lent against a zero asset base. So of course it was never going to be paid back. And there was never, it was always going to, be a write-off. What we're doing is we're investing in existing equity, and we are reducing the leverage. And I don't want to sort of, go on about it, but it just means that a homeowner potentially can use money from us to pay off their mortgage. So it's not one of those things where we're trying to increase the lending, where it's the opposite.
Yeah.
I just thought I'd throw that in.
I appreciate it. No, I think this is something for a lot of people. I know, sometimes people, or maybe just in the US, or maybe it's just me. No, I don't think it's me. But where, I think I want to have 100% of something, right? I want the whole 100% of the profit later on. But a lot of times, my philosophy is I'd rather have part of something than 100% of nothing.
You're right. That's the biggest challenge for us. It's this psychological attachment to something that may happen in the future, even though I am suffering today and cannot make I can't pay the mortgage, I can't, pay for my grocery bills. Yet, if someone offers me the ability to unlock some potential profit, no, you can't have that. That's all mine.
That's mine.
And I've been taught that equity is sacrosanct. Do not use your home as an ATM. Never touch your equity. And again, that's some of the sort of I wouldn't say it's education. That's some of the legacy learnings that we have to sort of unwrap and say, look, your home is an asset. Use it. Here's a way to access some of the capital without borrowing money. Go and invest that somewhere else. Make cash. Make a better return, or use the money to pay off your credit cards. So that is a real big challenge. When you talk about money, it's amazing the entrenched beliefs that people have that are entirely illogical.
Yeah, and that's what I spend most of my time dealing with, is these beliefs that people are holding on to that are held up as truth, and in fact, they're just beliefs that may or may not serve us. Do you talk with your children about money? I know they're young, 4 months old, but they're learning to bike. Do they have conversations?
Yes. Well, I think what we do is we try and so they have these Go Henry cards. So that's one thing. So that's, you introduce them to the fact that there are things you can do with money. In other words, rather than just sort of stuffing all of your $2 bills that you got for your birthday present into a sort of ceramic dinosaur. I think they're young. I've got my children are quite young. They range from 9 years old to 1.5 years old. So I've got four children. So, now is the time to try and talk to them about, how it works. What is money? And the fact is, you don't go and spend it just because you've got some numbers on your card. your job is not to try and reduce that number to zero as quickly as possible. Save it up. It's a challenge. You don't want them to end up being, so tight that they never want to spend money. You just want them to be aware that, when it's gone, and it's actually a lot harder to make than it is to spend.
Well, let me ask you this. So so your oldest is 9. So now at 12,
I got other children in the UK. The eldest over there is like 28 or something.
Well, then maybe on the other ones and the current one at 9. At age 12, are they going to go off to boarding school? Or are you going to try and keep them around and teach them some of your perspective? What happens when they get to 12?
Well, I think they would. It's just very different. I mean, boarding school. It was I would come home at weekends, so it wasn't something like you see at Hogwarts, for example. It was but no, they're staying here. No, I'm staying as close as possible. One of the things that I love doing here is working from home. I'm surrounded by lots of lovely, noisy children, so I have ample opportunity to shout at them on a regular basis, which I would miss if I sent them to boarding school. And yeah, it's kind of different over here. I just want them to be close. I want them to. They pick up stuff from you anyway. There's a lot of stuff you teach them, but there's a lot of stuff that they just, through this process of osmosis, they pick up from you, from your attitude and how you speak and what you do, and the excitement that you feel rubs off on them. So, I do fear for them, poor things.
I think they'll make it. Let me ask you this. How often do you review your money? How often do you take a look at a budget or just look at the numbers, check the banking account? Do you do that on a regular basis?
Yeah, very much so. Yes. On a number of different levels, on a personal level, on a business level, I can tell you exactly how much money I have in every account, business, personal, IRA. I know what the budget is, what we're going to spend, how much cash we've got, how long it's going to last. So that means that every decision I make, I know where that fits in. And the reason for that is I have run out of money in the past several times. And I never want to be in that position again, because it is incredibly debilitating. It's like having your legs tied together. When you're in that position, it's incredibly difficult to get out of it. You're in a position of weakness. You cannot negotiate in a position of weakness. All of the things that we do when we have capital, that's when we go and, that's when we get our lines of credit set up. That's when we get our, that's when we build the relationships with the banks when the capital's there, because, when we don't need the money, that's when they offer it. I do keep a very, very close rein on everything, but not to the point where, we don't spend anything, but you just need to know where everything is.
Absolutely. Just an awareness. Let me ask you this. What would you say to people, and I've been there, to people where they're in that place where there is no money right now, and it feels like you won't get out of that situation, right? It's really incredibly humiliating, painful, shameful, and you're just not in a position to negotiate, like you said. What would you say to people out there that are feeling like they're in that situation?
Well, I can tell you from a position of experience. So I've had companies, in 08, I had my lending company went bankrupt. We just lost all of our business overnight. And we were doing really well until we weren't. Yes. Right. Again, moving over here to the US, going through that sort of change and the divorce, and you're moving to another country where you have very little is actually quite challenging. So, I can say this from a position of having been in that position where you do wake up at 3:00 in the morning thinking, how the hell am I going to get to the end of the month? I have no idea. And the answer is you always find a way. So that's it. So the answer is, everything is transitory. Everything changes. Everything passes. You are in control. And it sounds terribly trite, but you really are in control. It's all about whether you want to go deeper or if you want to get out of it. There is always a way. And the other piece of that answer is the way out is staring you in the face. You just can't see it. And that's it. So the answer is it's there. It's right in front of you. It's obvious. It's slapping you in the face saying, this is the answer. But for some reason, you're looking somewhere else. So the moment you learn to get out of your own way, as it were, and see what the answers are, and the more you sweat it, what do they say? Fear is a temporary lack of information. You might be afraid of all this stuff. You just, so it will pass, but it's up to you. You got yourself into it. You can get yourself out of it just as easy.
Yeah, I was just rereading the book Presence, and they talk about actually looking at the solutions instead of looking at the problems, focusing on the solutions and not the problems. Because most of us are like, oh my God, there's no money in the bank. Oh my God, this is and just letting go of that and looking at it from a different perspective.
It is entirely that. And I've learned that, the world just exists between your ears, basically. It is you decide what your reality is going to be. And if you decide that you're going to get out of this problem, then what happens is you will get out of it. It is as easy as that. It is as subjective as that, but you are completely in control of what happens. Again, it sounds crazy, but it's not. It's not. If you decide that you're going to solve this problem, then you will solve the problem. It is inevitable that you will solve the problem.
Yeah. Just a matter of when. So
exactly. That's it.
Yeah. So Matthew, we're at our Fast Five. I'm going to ask you some questions, just top of the mind, that comes to you. What is one thing you never mind spending money on?
Tools. Okay. You can never have enough wrenches.
There you go. Exactly. Duplicated many times. How did your purchasing habits change during the pandemic?
I think really, having been through a number of financial crises, it was. I tell you what, I sold all my shares, which I really shouldn't have done, because I just wanted cash. So that was a great. Sorry. Yeah, I really shouldn't have done that actually. But again, I don't beat myself up, because if it had gone the other way, then I wish I had. So I just became very conservative. So you just held back, didn't know what it was, hold on to the stuff that you've got, and just be conservative and sort of slowed, just see what happens. So really, very aware of changing that everything and anything could change.
Yeah, absolutely. What emoji best describes your relationship with money?
I think just fun. I know that I can make money, and I think it's taken me years to have that confidence. So it doesn't scare me. I haven't worked for someone for 25 plus years. I've always been able to make money and support a large family, and it's been incredibly challenging all the time. But it doesn't scare me. I'm not obsessed by money. I don't want to make huge amounts of money, because I know that that's a road to emptiness. Once you make the money, you say, well, what do we do now? So it's a tool. It's fun. It's a way to get. It's a mechanism for enjoying. We bought an RV recently, which is something I've always wanted to do. So it's a way of buying experiences. Of what do they say? It's the most important thing is value for memory, not value for money. So it's a mechanism to create experience and fun and memories.
What's one thing you would never spend money on again if you didn't have to?
I don't know, really. I don't know, because all the things I swore I'd never buy again, I always do. One of the biggest challenges for me is investing in stock markets. I know this is like a roundabout answer, because I'm quite emotionally driven in terms of my decisions, sometimes. So if I buy something which is outside of my control, like a stock, and then the next day the stock goes down, I think, God, I've got to sell. It's going to crash. So I'm not a very good investor in things that I'm not in control of. And any investment I do now is very conservative. So I'll only buy into, asset-backed things. I won't buy anything that's sort of super high alpha. So really having, I hope this is answering your question. Having bought very speculative investments before, I will never do that again.
Okay. and if you had to work but you didn't need money, what would you do?
I think I'd fly. If I had to work, I just love flying. I haven't flown for quite a while, but I would just love to. I just love the excitement of flying helicopters because there's so much concentration involved, so many moving parts, so many things, so much excitement. Every day is this sort of, I think that's the thing. I would do something where every day is different. Where you have that challenge where you never find yourself in a position where every day is just the same thing over and over again.
We are at our sweet spot moment, our M&M moment, money and motivation. What is a practical piece of advice or a piece of wealth wisdom you can offer our listeners?
When we talk about investing, and again, I was thinking about this when you mentioned this, earlier on. Treat investing like a job. A lot of people who get involved in active investing don't do anything like the amount of research or work that is necessary to be successful. And if you don't do that, then you won't be successful unless you're incredibly lucky, which can be quite irritating. God, how did you do that? So again, so if when we talk about real estate investing as well, we touched on it earlier. People tend to assume because it's real estate, it will automatically make money. But I would just say that treat investing like a job. Do the research, do the work. Yep. Think about what happens here. What are the risks? What can go wrong? Don't just sort of leap in, and then take your time, meet people, talk to them, find out what their experiences are, and then make the investment. Because there are so many people that I know, myself included, who have lost money where you didn't need to, if only you'd done that little bit more research.
Yeah, absolutely. And I think that's a big piece of what I was hearing today is do the research, check things out, whether it's real estate, whether it's money, is just do your homework. And I'm also hearing that our situations are temporary. So whatever that situation is, keep moving forward. It'll eventually work itself out. People are resilient. And so I think there's that mindset that even if you didn't name it, there's a positivity about it's all just going to work out. And that even when you've made emotional choices that didn't serve you, you didn't beat yourself up. Even if it drove you crazy, you just went, okay, well, let's go from here.
Exactly right. You have to take each day. You can't allow yourself just to, go through decisions that you've made in the past over and over again, churning through them, every night. You've got to, it is entirely up to you. And positivity is one of those words that is used over and over again. So its meaning has decayed and been diluted. But it is that, in other words, you have the choice of how what you do today. And again, I don't want to sound like some sort of third-rate novelist, but it is that you can either decide to sit back and do nothing and then let the bow wave of life wash over you, and you become the flotsam and jetsam like everyone else, or you can just drive forwards, and it takes time. It takes effort to do that. But at the end of the day, you can say, I've done something today. Every day, you've got to be able to say, I've achieved something. I've done something. I've moved it forward. Even if it's a little bit, then that's all you need to do.
Absolutely. Move it forward. Where can people find you on social media and online?
Well, the best place actually is the company QuantmRE, and we've got contact details and everything about us is there. So that's QuantmRE.com. I mean, we have it's not just me. There's all of us there. So I think that's probably the easiest place to reach me.
We'll have people track you down and stalk you.
Please do, yes.
Please do. Well, to our listeners, please don't forget to share the love. Like, follow, and share on Facebook, Twitter, and Instagram. Search for Money You Should Ask, all one word. Follow this podcast on your favorite podcast player, or visit Spotify and search for Money You Should Ask, or click on the link in the description. If you're watching this episode on YouTube, don't forget to like, comment, and subscribe. For more tips and tools, or how to learn how to have a healthy relationship with money, check out themoneynerve.com. That's nerve, not nerd. Matthew, it's been awesome having you on the show. I appreciate your time and wish you well.
Thank you very much. It's been a pleasure.